When a nation's youth begin canceling their credit cards and hesitate to borrow against their future, it signals the end of that country's economic miracle. In China, the credit card industry is declining at a startlingly visible rate. According to Yikai's financial report on September 1st, the total credit card loan balance across 14 listed banks, 6 state-owned giants and 8 joint stock banks, stands at 7.52 trillion yuan. This reflects a decrease of 1,975.72 billion yuan from the year's start, a year-on-year drop of 2.56%. In other words, within 6 months, 2 trillion yuan has evaporated. Most striking is China Bank's credit card loan balance, which plummeted by 522.5 billion yuan, an amount equivalent to the annual fiscal revenue of a mid-sized province vanishing. Ping Bank and Industrial Bank followed with declines of 9.23% and 8.07% respectively. These figures reveal a collective decision by millions of households to avoid spending, borrowing, or taking financial risks. Some argue that shrinking loan balances indicate a rational shift toward deleveraging, yet the data tells a different story. Not only are loan balances contracting, but credit card transaction volumes are also collapsing. Among 12 banks reporting data, total credit card spending in the first half of the year reached 11.47 trillion yuan, down 11.05% year-on-year, a loss of 1.42 trillion yuan. China Bank and Everbright Bank saw transaction volumes drop by over 18%, while China Construction Bank and Agricultural Bank experienced smaller declines of around 5%. Even China Merchants Bank, the credit card leader, couldn't escape, with transactions barely exceeding 2 trillion yuan, still down 8.54% year-on-year. This decline in transactions points to a stark reality. Consumer confidence is rapidly eroding. Imagine a young professional born in 1995 who once used a credit card to purchase a Dyson vacuum cleaner. Now they scrutinize every coffee purchase, cancel extra cards, and retain only a basic, no-fee card. In a China marked by subdued consumption, credit cards have shifted from being a gateway to a better life to a burdensome weight. Compounding this, the credit card business is hemorrhaging. China Merchants Bank reported credit card interest income of 306 billion yuan in the first half of the year, down 4.96% year-on-year, and non-interest income of 105 billion yuan, down 16.23%. CITIC Bank, Everbright Bank, and Huaxia Bank fared worse, with credit card revenue dropping over 10%. CITIC Bank's card fee income fell to 69.7 billion yuan, down 12.29%, while China Merchants Bank's card fee income dropped 16.37%. Meanwhile, bad debt rates are surging. The People's Bank of China reports that credit card balances overdue for 6 months soared from 33.8 billion yuan in 2008 to 1,239.6 billion yuan by the end of 2024. A 36-fold increase over 16 years. In 2024 alone, this figure rose 26.32%, reaching 1.43% of total credit balances. In the first quarter of 2025, the average discount rate for bulk transfers of personal bad loans fell to 4.1%, with a principal recovery rate of just 6.9%. Simply put, for every 100 yuan of bad debt sold, banks recover only 7 yuan. More troubling, China Bank announced on September 14th that it would add collection costs to overdue bills, meaning debtors now face additional fees on top of unpayable debts. A cruel twist. A bad debt professional noted that rising litigation costs and dwindling recoveries are straining traditional outsourced collection models. Banks can't recover funds, debtors can't pay, and the credit card system's downward spiral is accelerating. Equally telling is the sharp drop in credit card numbers. By June 2025, 10 banks reported a total of 890 million active credit cards, down 3.91 million year-on-year. Ping Bank suffered the most, losing 6.26 million cards in a year, a 12% decline. Industrial and Commercial Bank and Bank of Communications each lost about 4 million cards. In 2024, nationwide credit and hybrid cards dropped by 40 million, a 5.14% decline. In the first half of 2025, another 12 million cards were canceled, reducing per capita card ownership from 0.54 to 0.52. Young people are cutting up their cards, foregoing rewards and benefits. The reason is clear: no money to spend, no means to repay, and no need for extra cards. On social media, users share photos of severed cards with captions like, "I had 7 credit cards. This year, I canceled 6, keeping only 1 from China merchants." This reflects not just personal choices but a generation's outlook on the future. The dream of consumerism has faded. Even more alarming, banks are struggling to survive. Wind data shows that in the first half of 2025, over 40 credit card branch centers were approved for closure. Between July 16th and 21st, the Guangdong Financial Regulatory Bureau ordered the shutdown of Bank of Communications' Zhuhai branch and Minsheng Bank's South China branch credit card centers. In April alone, Bank of Communications closed over 10 centers, including those in Jinan and Shenyang. This signals that banks no longer see credit cards as profitable and are cutting losses, an unprecedented move in Chinese financial history. Consider China Bank's August 31st decision to discontinue 24 co-branded cards followed by CITIC Pudong Development and Postal Savings Banks. The once fierce co-branded card race has ended, as banks lose faith in credit cards as a lifeline. Amid this credit card downturn, the People's Bank of China announced the removal of upper and lower limits on credit card overdraft interest rates. This allows banks to raise rates at will. As China Securities Journal noted, while this offers banks flexibility, it could burden consumers with higher rates. In essence, as people struggle financially, banks may extract even more. The shrinking credit card sector is a symptom of a deeper issue. China's economic engine is stalling. Rising bad debt rates are tied to a fracturing job market. Xiaopin's 2025 China Employment Market Prosperity Report shows the CIR Employment Index at 1.32 in Q2 2025, a 5-year low. Urban youth aged 16 to 24 face unemployment rates above 18%, meaning at least 1 in 5 young people is jobless. Without stable jobs, there's no stable income, and without income, there's no ability to repay debts. The surge in overdue credit card balances from hundreds of billions to over $1 trillion yuan reflects this chain reaction. Many young people, not fully unemployed, are trapped in unstable gig work like food delivery, ride-hailing, or live streaming. These precarious jobs can't sustain heavy debts, making credit card bills the final breaking point. The credit card collapse is also concentrating risks for banks. Central bank data shows that by June 2025, bad loans across Chinese commercial banks exceeded 3.5 trillion yuan, with a bad loan rate of 1.78%, a 3-year high. Credit card loans are a major driver of this increase. Unlike mortgages, which are backed by assets, most credit card debt is unsecured, leaving banks with little recourse during collections. In the capital markets, bank stocks are tumbling. By August 2025, the Shanghai Shenzhen Banking Index fell over 12%, erasing nearly 200 billion yuan in market value. Investors are signaling deep concerns about China's banking system. Credit card defaults are a systemic wound for banks. As this wound spreads, it threatens the financial system's stability. As more people fail to repay, the issue transcends finance, becoming a social crisis. Court data shows that in 2024, over 4 million credit card dispute cases entered the judicial system, up 28% year-on-year, many involving young people, including recent graduates. More alarming, the deadbeat list is growing rapidly. By mid-2025, over 16 million people were listed as untrustworthy debtors, double the number from 5 years ago. This status bars them from high-speed trains, luxury hotels, and normal employment, fostering social stigma and unrest. Credit card defaults are not just a financial issue, they're a spark for social division. Economists note that a nation's growth depends on credit expansion. America's prosperity relied on widespread credit. Japan's bubble era was fueled by aggressive borrowing, but China's trajectory is reversing. The credit system is crumbling. Card cancellations, shrinking loans, falling transactions, and rising bad debts reflect a profound distrust. People no longer believe in a brighter future. When young people stop borrowing, families save instead of spend, businesses avoid investment loans, and banks hesitate to lend, this isn't a temporary dip, it's a structural slowdown. Credit cards are the most glaring warning signal in this unfolding collapse. Thanks for watching and joining us on this journey to unveil China's many layers. If you found this video insightful, please give it a thumbs up, share it with others, and hit that subscribe button to stay updated. See you in the next video.